everybody. Welcome back to the crypto realm. All right, so we're going to talk about Bitcoin's last stand, apparently. ECB staffers say the crypto is on the road to irrelevance. So we must be pretty close to the bottom. Man, so crypto regulation can be misunderstood as approval. The officials at the European Central Bank said, okay, screw the banks, right? Let's hear what they have to say. Bitcoin, BTC, was created nearly 15 years ago as a way to improve upon or replace the existing monetary system, but those hopes haven't panned out. Right Ulrich Bindseal, Director General of Market Infrastructure and Payments at the ECB, along with advisor Jürgen Schaff. All right, so the ECB is like another corrupt organization, just like the WEF and all these other institutions. They're just not good. They have their own agenda at heart. So Bitcoin has never been used to any significant extent for legal world transactions, the two said in a blog post titled Bitcoin's Last Stand on Wednesday, while bulls seem heartened by Bitcoin's ability to hold the 16,000 to 20,000 range amid the crypto collapse. Bindseal and Schaff called the current price action artificially induced last gasp before the road to irrelevance. Wow. All right, so we have to look at like inflation here, what the banks have done, and look at the governments. They say Bitcoin has had no significant extent for legal world transactions. Well, where is it legal? How many countries don't even have it legal yet? So you can't really use it, right? It's illegal. So we're being held back by officials, and these ECB. These are the people paying off our officials. So this is like all propaganda. You have to see it for what it is. The conceptual design and technological shortcomings of Bitcoin make it unsuitable for payments. And since the crypto does not generate cash flows or dividends, it's a poor investment as well, they argued. So it's already been known that Bitcoin is run on a lot of green energy. So that argument is out the window already. And the fact that it's irrelevant, I don't know, because bankers have created the anti-Bitcoin, which is Bitcoin but a clone, and regulated it. So if it was so irrelevant, why did they have to copy it and make it centralized and then go, now it's good? It's better in their hands, but in the public's hands? I don't think so. That's why all the troubles in the world have happened, because it's been in a few hands of centralized people. Trotting out the well-worn Ponzi argument, the two claim Bitcoin's value is reliant on continuing waves of fresh money from new investors, and said big Bitcoin investors have the strongest incentives to keep the euphoria going. Don't misunderstand regulation as approval, the two warned, criticizing the fast-growing crypto lobbying class as putting forth the idea that crypto is just another asset class worthy of a spot in investor portfolios. ECB is not known for championing crypto. The bank's critical assessment of Bitcoin came with a warning about how the industry is regulated. In fact, lawmakers and regulators around the world are scrutinizing their approach to supervising crypto following the collapse of crypto exchange FTX, darn right, which operated across multiple jurisdictions with little accountability. And if you're getting that much money, giving that much money to like political parties, they're not going to stop you, at least not right away, until their bags are full, right? And then they see a little attention coming their way. That's when they'll stop you. On Wednesday, Singapore's financial regulators defended their standards of supervision to lawmakers and explained why a state-owned fund was invested in the fallen crypto enterprise. All VC propaganda. Remember, there's only a few real coins out there. The rest are just backed by VCs, people with money looking for self-interest and gain. Nothing else. Meanwhile, in the European Union, which recently agreed on the text for its sweeping markets and crypto assets, the MiCA regulation, lawmakers expressed concerns about the effectiveness of the rules and if they'd be tough enough to prevent future collapses. Okay, you have to look at two banks. They get charged for fraud every year, or every few years. I wish I had that list right now. But there's a big list of banks committing extreme fraud against its customers and being charged hundreds of millions of dollars for it and billions of dollars over the years. So they have to watch what they say. They're a den of thieves, these people. Feinsel and Schaff closed out their essay criticizing the energy-intensive Bitcoin network as an unprecedented polluter and warning banks of likely reputational damage from promoting Bitcoin. Okay, so green Bitcoin runs pretty much on green energy. It can easily be like Shell, the oil company, is using it now on their flares, which creates waste energy. They're turning that waste energy into Bitcoin mining. So they're polluting less. There you go. And they're gaining more money. What's the hate about that? And these people don't realize that banks on every corner, big office buildings, take up all this power, all this energy, all this overhead, all this care that needs to be put into all those employees. Bitcoin doesn't have employees. How many thousands of employees do banks have around the world? In offices, teller booths, paper being used every single day. It's pretty ridiculous of them to talk about Bitcoin and its energy consumption compared to them. They are like 1,000 times worse in energy consumption. And what they do with the money doesn't help the world at all. So these people are like the enemy, and we need to be very aware of this. This is all propaganda. So let's take it for what it is, and let's find our politicians that are willing to help us out, and even the ones that are up and coming that want to be involved with crypto. We need to support them. They need to be in the right positions to make this all go through smoothly. Otherwise, there's going to be heavy-handed regulation, and we're all going to lose everything. This is the crypto realm. Play hard, trade smart.